Hello everyone. Today we will look into partnership firms. So what is a partnership firm? A partnership firm is nothing but where two or more people come together to form a business. When in terms of sole proprietorship, it is going to be a single individual who is going to own and operate. But in partnership firm, it is two or more individuals who come together to start their business or firm. So let's look into advantages and disadvantages of choosing partnership firm to be your startup legal structure, having four different classifications. The first one would be the incorporation, registration and compliances, and the second one would be the liability aspects, and the third one would be what are the limitations that are involved, limitations or restrictions that are involved, and the fourth one we will look into the upgradation part, or what is the possibility of updating your partnership into a private limited or a public limited or a better version of the same. Okay. So when it comes to registration, incorporation and compliance aspects, partnership is also easier when it compared with your private limited and public limited and LLP kind of business structures. But partnership registration is not mandatory, but at the same time it has to accompany with a partnership agreement. So it is very obvious that when more than one people get involved in a trade or a business or whatever it is, there has to be an agreement between them. So what kind of a trade are we going to do, and who is going to invest what amount, and what are all things that are going to be the responsibility of every single individual in that particular firm. Okay. So definitely it is a mandatory protocol that a partnership firm has to accompany by a partnership agreement. Okay. Is the registration of the partnership agreement mandatory or not? It is at the will of the partners. So the partners can decide whether they would want to register the agreement or not. It can be a registered or an unregistered agreement, but definitely it has to travel with a agreement. Okay. So the partnership firms are governed by the Indian Partnership Act 1932. So I would personally suggest, when you are ready for an agreement between the founders or between the partners, then registration wouldn't cost you much, because when you do a registration of the agreement, of the partnership agreement, you can avail a separate PAN number for your partnership firm. So all the financial transactions would go through that particular PAN number. So it would be easy in terms of administrative aspects when it comes to financial transactions. When you try to calculate it quarterly or yearly or half yearly or whatsoever it is, as convenient as it suits for your business. So registering a partnership firm under the Register of Firms under the Act of Indian Partnership Act 1932 is available and possible. So you can register it, and after you register it, you can apply for a PAN number exclusively for your partnership firm. But in terms of sole proprietorship, no, you will not get a separate PAN number, and the PAN and your individual PAN number has to be used for all the financial transactions. And so registration and incorporation is as easier as possible. It's similar to that of a proprietorship firm. But when it comes to compliance aspects, is there any major differences between sole proprietorship and a partnership? No. Compliance is also going to be as simple as that. So every year you would have to file your balance sheet and income tax returns. If it is a registered partnership firm, you would have to go with the PAN number of the firm. Okay, so no major compliances are required as per the government protocols. But at the same time, if you acquire GST license or any other central government or state government license, you would have to follow the rules and regulations of that particular license. For example, if you fall into the trade of GST, you would have to file your monthly or quarterly returns. So specific licensed based compliances is completely different. But in general compliances aspects, only your balance sheet and income tax returns for the year has to be filed. That is it. Okay. So the incorporation registration is easier aspect. So the second point that we would take into consideration is liability. So how is the liability factor worked out in partnership firm? This is the area where most of the entrepreneurs go through trouble, or general common people misconceive it or they take it in a wrong sense. For example, In terms of liability, in a partnership firm as well as your sole proprietorship firm, the liability is unlimited, irrespective of the shares that you hold in the business. For example, let's consider A and B as partners. So A holds 80% of the shares and B holds 20% of the shares. So A and B come together to form a partnership firm and they run their business. They acquire, let's say, 1 lakh from a financial institution as a working capital. And if they default or do not pay back, does that mean B is liable only for 20,000 and A is liable only for 80,000? No, both are equally liable. So until unless the full debt is cleared, none of them will be relieved or released. The financial institution can sue both of them equally. For example, if the partnership firm gives a check, a false check, and doesn't honor it, they are liable under the Negotiable Instruments Act 138. Okay. So does that mean 80% shareholder would be sued or would be imposed more penalty and 20% of the shareholder would be imposed a lesser penalty? No, both are equally liable. So when it comes to partnership firm, the liability is still unlimited, irrespective of the shares that you hold. It can even be 5% of share that B holds and 95% of share that A holds. For example, if the partnership firm indulges in a misconduct or a wrong trade or a trade which would get them illegal profit or a benefit, and the whole profit is being enjoyed by A, who holds 95% of shares, and B, who is just holding a 5% of share, doesn't enjoy much, does that mean that B is not liable for the illegal act or a misconduct that the firm are indulged in? No, both A and B are equally liable, and the liability in terms of the legal aspects is unlimited on them. So until unless the complete liability is being disposed, both will not be released. So this is the area where generally entrepreneurs misconceive that the liability is relevant to the percentage of shares that you hold. No, when it comes to partnership firm, the liability doesn't fall into this particular category of your holding of shares. So liability aspects is unlimited. Okay. The third aspect is restrictions. Okay. What is the limitation or restrictions in a partnership firm? Generally speaking, when it comes to the scalability of the business or the turnover of the business, or when it comes to the type of industry that you choose, there is no major restrictions. There is no restrictions at all. You can function as equivalent to a private limited or a public limited company. You can apply for any kind of a license, central government licenses or state government licenses, or it can be anything and everything that is accessible for a private limited is equally accessible for a partnership firm as well. But still there are few restrictions which the Indian Partnership Act 1932 imposes. The first one is maximum 100 shareholders can be in a partnership firm. When the number of partners get increased to a certain level, it is always advisable to switch to a private limited company, which would help you a lot in the administrative aspects. So the first restriction, as I said, is maximum 100 members can join together for a partnership firm. And the second restriction is a foreign national should not be a partner of an Indian firm. So that is a very important restriction. The third restriction that the Indian Partnership Act imposes on the partnership firm is a partnership firm cannot hold assets, let's say immovable assets. For example, if you purchase a land and build a building for the functioning of the business, the land or the building cannot be on the name of the firm. Rather, it can be on the name of the partners. So it would be for the business and the title would be on the partners. So the partnership firm cannot hold title for an immovable property. Definitely you can raise invoices in the name of partnership firm. You can render service, receive service, everything which is movable can be used in the name of a partnership firm. But assets, when it comes to assets, you cannot hold assets in the name of a partnership firm. So the assets has to be held in the name of the partner and it should be utilized for the business. Okay. So this is a very key aspect that you would have to note down. But when it comes to sole proprietorship, it is going to be a single person run business. So the title can vest with the individual himself. So that doesn't create any kind of a dispute. But when it comes to a partnership firm, when there are 2 or 3 partners involved and the property or the assets stand in the name of an individual partner, then there has to be a proper and a clear agreement that is being defined between them. So as I said, assets cannot be in the name of the partnership firm and it can be held in the name of the partner and it can be utilized for the benefit of the business or the firm. Okay. So these are the major restrictions that are available. So in terms of these restrictions, the government has come up with a new enactment. A new act has been passed in 2008, which is Limited Liability Partnership Act 2008, through which these restrictions have been looked into. We will go through about the Limited Liability Partnership in a completely separate video. Okay. So when it comes to a limited liability partnership, these restrictions have been looked into and they have been redefined in a better manner. And also the liability aspect which we were talking about is the unlimited liability is also considered in the Limited Liability Partnership Act 2008. So generally speaking, in a partnership, these 3 are the major restrictions that are followed. Okay. And the fourth aspect of upgradation or updation. Okay. Is it possible for a partnership firm to get updated into an LLP or a private limited or a public limited? Yes, there is no challenges at all involved in this aspect. So when it comes to a proprietorship, it cannot be a normal upgradation or a normal migration. Rather, it has to be an acquisition kind of a migration. But when it comes to a partnership, no, those protocols or those restrictions are leaved. So you can definitely go ahead and update your partnership into a private limited company. And here comes the question. The assets that the partnership firm holds are already on the name of the partner. So when it comes to a private limited company, the company is a separate entity and it can definitely hold assets and it can definitely function as a separate entity. So in this situation, if a partnership firm is migrated into a private limited company, what would happen to the assets of the company, especially when it comes to immovable assets? According to section 575 of the Companies Act, the immovable property that vests with the partnership would automatically vest on the newly incorporated private limited company. And the private limited company would just have to pass a board resolution and adopt the assets that were present in the that were utilized or that were owned by the partnership firm that was functioning previously. So updation is possible. So there is no major challenges when it comes to updation to a private limited company or a public limited company. You just have to follow the general norms of private limited company incorporation. Okay. So here we have taken consideration of 4 major classifications. The first one is the general incorporation, registration and compliance aspects. So as I said, it is easier, but a little more points has to be involved because more than one people are involved in the business. The second is on the liability. The liability is still unlimited when compared with the proprietorship firm. And the third aspect is limitation on restriction. I have named 3 different restrictions that are possible. And the fourth one is on the updation. Yes, updation is possible. In a separate video, we will go ahead and look into what is limited liability partnership. And on a separate video, we will look into private limited company. So thank you all. Thank you so much.